There's a lot of stress inside the crypto market as the moving averages are above Bitcoin's price and there's not much below it, and there's quite a big gap all the way down to 85,000 if these moving averages get violated. Are we going to see a sell-off down to that 85,000? Well, many retail influencers are saying, yeah, we're going to see it. Look at the meme coins, Melania, Trump, Bong, Pepe. They've all lost a huge amount of value. And we know the memes are the gateway for retail to enter the market. In this video, we're going to look through the structural perspectives on the market to determine if we're going up or down, and the levels tomorrow that you need to keep your eyes on. Not today, tomorrow. Let's run the numbers. Inside the crypto market, we've seen fear just creep into the crypto market for months and months and months, literally since round about the middle of November. And we've seen a big spike up in fear just recently. People get afraid when their account balances get hit by things like this, and they're an absolute tragic thing to go through. Many people at this stage will just give up, but there is a lot of people out there who say, how can I do it better? How can I learn how to manage these price waves and not get thrown out when retail gets thrown out? How do I become an institution of one? That is the right focus. As a member of this community, our focus is to know the price levels, the resistance levels, and the support levels for tomorrow, not just for today. And we have the world's only leading indicator of price to help us to do that. We also know how the markets work and how retail looks at the market. All required things to be an institution of one. When we look at these daily EMAs over Bitcoin, we can see around that 96,903, the 97,855, and the 97,915 level. There's all of this perceived resistance, and we've got perceived support at 93,922. Now, why do I say perceived? Because it's literally that. An EMA of 1 will just be the price action. That's it. You cannot simply average a price and say this is a meaningful support and resistance level. It would work if price was non-exponential, but even then, it realistically wouldn't be that great. What we need as institutional traders and investors is the most statistically significant support and resistance lines in existence. We need a leading indicator of price. Let me just put some value labels on here for you. As an institution of one, you need to know where price is going. In yesterday's video, we were just here, and we said all of these safety nets are likely to capture, at least consolidate, price action, if not better, reflect it back. And we saw a reflection back to the 96,943 structural resistance level. As price was coming down like this, it seemed like fantasy yesterday to expect or understand that these structural levels would stop and reflect Bitcoin's price momentum into the opposite direction. But that's exactly what happened. The more structural support that you get underneath the current price, the higher the probability of a reversal back. And these reversals are caused structurally. Consolidations are caused from structural levels as well. Big drops in price are caused by negative CTKS gaps, and big increases in price are caused by positive CTKS gaps. And we know where the gaps are in advance of price momentum and price movements. The CTKS method doesn't look at 3 patterns. For example, different price charts here have different candle patterns, but we have the ultimate understanding of where the structure is. Now, how do you read structure? These individual dotted lines are called Stanfield levels or SLs. They're also known as CTKS levels. When you have thinner ones, that is less powerful. But when you have thicker ones, that is more powerful. When you have a cluster of SLs that is even more powerful, as we saw that it reflected back in yesterday's price action. The thing to note, some are powerful, some are less powerful, but all are significant. And thank you everybody for your comments in yesterday's video, just awesome. If you're new to the community, please like and subscribe, and we have one of the best communities on YouTube, and you're very welcome here. This 96,493 structural resistance level has created a pain in the butt for Bitcoin. Of course, that's a technical term. From this perspective, it's important to understand where retail is thinking about and where the institutions are thinking about buying and selling. We can see this 96,493 is definitely the key level for today. So for the next 24 hours, if we manage to get above 96,493, and this is being heavily defended by the sellers at the current time, therefore, bullish price momentum will occur above price being 96,493, and bearish price momentum if the price dips below 94,574. Retail will get terrified around a structural support level, so please bear this in mind. They got terrified yesterday, and that's why so many influencers were just saying Bitcoin is going to 80,000. They do it for a reason. But unfortunately, this is where a ton of structural support exists inside the market. If it comes down with so much negativity, we should see a degree of consolidation. For total crypto market cap, we have a lot of structural overhead resistance at 3.16 trillion. You can see as Bitcoin has just wandered around, literally at that particular structural resistance level, the entire crypto market is coming up to its own structural resistance, courtesy of Bitcoin. Much gratitude to the people who reached out and said that they would like to look at ADA's structural levels. As we can see from the past couple of days, ADA has been bleeding. But where is the structure? That is the critical point. To answer that question, let's just pop on the indicator. Now I'll just put on, I just added these little labels in here to just help you to understand what the price is. ADA has been quite weak, so when we consider that Bitcoin has been flatlining, ADA has been becoming weaker. But however, the 73.99 area of structural support is actually really solid. And if we come down further than that, the 71.98 is even better. These are really solid and substantial structural support levels. If we get above 76.21, we need to take out the 77.21 mark to move up higher. But there's a positive CTKS gap, so that could mean a lot of upward price momentum, followed by a degree of consolidation. The difference between our community and other communities, all communities are good, but our community understands what can happen with price tomorrow from a three-dimensional perspective. We don't just tie ourselves in to something that we want to see. We just gauge the market on its own action. Because the markets are really complex, we have to do that. How has Solana been going? We saw a big decay in price recently, followed by Bitcoin bouncing and Solana bouncing as well. So far, we've seen Solana come down to an area that is incredibly important for it to bounce from. But we know all of this depends on Bitcoin. What are the structural levels? Let's just check it out, and I'll just put those labels in there for you. Now, what we can see at the current time is that Solana has lost its 170 level of structural support. It's also under negative price momentum. Solana has been incredibly weak. You might remember that ETH was incredibly weak also, and then ETH started to get going because there were just too many shorts in the Ethereum chart. What we need to look at is this 165.40 level of structural support for Solana. Solana, this loss of the 170 level is quite difficult for Solana to get back through, so please be aware of that. But if we think about it, Bitcoin is also facing a level of structural overhead resistance, which is proving to be a bit of a headache. If Solana manages to get above the 170.10 mark, there is a positive CTKS gap, and we could find ourselves way back at the 180.30 mark. And fortunately, there are safety nets below, just like I was talking about Bitcoin structure in the previous video. Understanding the structure on different charts is really important. If you don't understand the structure, it's very difficult to be an institution of one. You can move with the institutions, or you can try to just outthink them, but it's better to move with them. You can move with them when you understand where the structure is inside the market. When we're looking at Doge, Doge's market structure is very top heavy. Now, what does this mean? It means that if Bitcoin comes down, Doge could retrace really quite wildly. Now, is this a cause for concern? Absolutely not. If you're a believer in Doge, this is a time to stack those sats inside Doge. And if you're a trader, getting this liquidity is a really good idea. You can use this to your advantage. Remember, you never disadvantage another person inside the market by providing liquidity. It's very useful to think that financial markets just work as pooling mechanisms. They pull all the money in, and who gets paid? The people who know what they're doing. They get paid. And who makes losses? The people who haven't observed what the market was actually doing. It's pretty tough to hear it in this manner, but it's really true. If you understand markets and you understand how they all intercorrelate and interconnect together, if you know where the gaps are, if you know where the structure is, you can make an informed decision. The market will reward an informed decision and punish a story. To become independent from stories, we look at the cheat sheet from row 1, row 2, which are all about risk, and they reconfirm each other, to row 3 and row 4, which is the stock market. They reconfirm each other as well. Row 5 through to row 7 is the crypto market, and they reconfirm each other as well. So you've got 3 sectors or 3 areas that you need to confirm. As an institutional player, you don't give 2 hoots about the stories of retail influencers. They don't mean anything. Retail is just riding a roller coaster of fear and emotion. Institutional players deal with massive amounts of funds. They can't get caught up in that particular way of thinking. And to manage a large account value, you cannot get caught up in it either. Even if your account value is really small, in order to grow it to really large, you must think differently. One way to think differently is to understand where price could be going across a range of different cheat sheet items. For example, silver in last month, we draw up these particular up and down price momentum paths, which is coming from level 2 standard certification. We draw these up in the previous month, at the start of the month, and then we don't change them. We can see, for example, if you were looking at silver, you know it's coming up into overhead structural resistance at the current time. All of these lines are drawn from structure. If it breaks out of structure, it can go higher. These are normalized price paths. They're very powerful. Thank you to our community members who reached out and said the Nvidia chart would be a helpful chart to look at. As far as structure is concerned, the 142.40 is really important, and also that's an important structural resistance level, and an important structural support level is at 136.30. If we manage to get above 142.40, we can grind higher. And we did come into this a couple of days ago, but we were since rejected backwards. There are some lighter levels that you may have a little bit of trouble seeing, but they are there. And what have we noticed with Nvidia just recently? Nvidia just cut over short-term resistance. It rallied a bit, rallied back to around this area, and now it's just got negative price momentum. This is favoring the 136.30 mark, but it really depends. Nvidia's price momentum depends on so many other things, like the VIX, the DXY, the yields, of course, the major indices as well. For a bullish case momentum, getting above 142 is the key. Bearish case momentum, getting below 136.30. In yesterday's video, we looked at the S&P 500. We were just here at that stage. And we saw that the S&P 500 gapped up. Wow, it did a very good job. It hit the previous all-time high and then backed down to structural support at that 61.14. And it's been slowly grinding its way through this upwards positive CTKS gap. It's putting the 61.77 in its sights. That's the bullish case. The bearish case is to drop below 61.14. Unfortunately, retail believes that all price momentum inside the market is completely random. It couldn't be further from the truth. There is intercorrelation and interconnection absolutely everywhere. And junk bonds. Look at this beautiful movement in junk bonds. That is what fueled the S&P 500 to come up. By understanding intercorrelation and interconnection between charts, you advantage yourself. You get the knowledge that the market will pay you with as well. Now, what is the structure that sits below all of this? Because that's the really key point. Why did junk bonds reflect from down here, this 96.52? Because there was structural support. There were a lot of safety nets inside junk bonds that reflected price back up. Now, we've come into a structural overhead resistance at 96.68, and that's just reflected or dampened down junk bonds a little bit. But we do have this upward price momentum. So it's putting the 96.78 inside the target. Now, what does this mean to us? If we have upward price momentum, that is good for the crypto market, good for stocks, good for commodities. So bullish case, 96.78, bearish case, 96.52. A lot of people battle the concept of consistent profitability. It's not consistent profitability that you need to focus on. It's consistently understanding the market. As soon as you understand the market will pay you. It is as simple as it gets. The market just pulls the money together and it pays those who know what they're doing. It's like going to a football match and not being able to play football and you're playing. Well, you're going to get benched. Therefore, the secret to consistent profitability is to understand what you're doing. If you understand the rules of the market, you will do really well. And what do you need to understand? First of all, how the charts are intercorrelated and interconnected. That's pretty important. If you're looking at Tesla, for example, and you don't look at the major market indices, you don't look at the DXY, the VIX, junk bonds, the yields, you're going to not be paid by the market. And you might say, but Ken, I'm being paid by the market really well. Can you imagine if you were doing all of those things, how much more you would get? That's the way you want to think about it. Okay, and of course the second thing is you must know where the structure is, because the structure will support price and the structure will be where the price starts to come back from. Structural support and resistance is really important. And thank you to the people who reached out and said that they would like to look at the Tesla chart. 373.30 is a very important structural level to keep your eye on, as is the 338.90 level. We do have lighter structural support and resistance levels, a resistance playing out at 361.80, a support playing out at 358.40, and a couple playing at around that 351.30. If you know where the structural levels are, it's a game changer because at least you're looking through an institutional lens and not a retail one. Perhaps one way you can understand structure a little bit better. If we just put on the structural indicator and we look at this, what is this? This is a structural failure. Now, what does this mean? As soon as a chart has structural failure, it creates negative structural attraction to structure below it. Now, what happened here? Well, we can see this structure acts as a safety net to just capture price and start to slow that descent around. When looking into MicroStrategy, I hope that helped a little bit. As soon as you lose a structural level, it creates negative structural attraction. But if you gain, for example, if it goes above and it's confirmed, that confirmation is a really important thing. And you can see MicroStrategy was failing. And when it failed, it opened up the 318 level. And because it had a negative CTKS gap, it can even overshoot that. So what it means for us, especially if you're in MicroStrategy, which is now strategy, thank you Michael, Bitcoin strategy, is that 318 to 319, this is pretty important. If we get positive price momentum, we'll come back to the 330 to 331 levels. But what about negative price momentum? If we lose the 318 level, that puts the 312 and 309 levels in the targets. Please let me know in the comments, do you think we're coming back to 330 or going down to 309? As you go through your trading and investing journey, it's really good to buy at spot and to sell at spot. When you do that, you own whatever it is that you've got. A lot of people say, but Ken, I don't have much. And if you don't have much, it's even more important to guard it. It's kind of like this. If you go under leverage and say, oh, I'm getting 10 to 1 leverage or 20 or 50 or 100, you better know what you're doing because the market will slap you around if you don't. All of the trades I do, all of the time, are spot trades. They're not done with any leverage whatsoever. You can check these trades out at CTKSmethod.org, and there's a lot of free resources there. I suggest that you also just pick up the cheat sheet. Picking up the cheat sheet and looking through the videos on how to fill it out is a really, really good idea. It's available absolutely free. You must know how to read structure and you must know how to read across the charts, or the markets will just mercilessly punish you for the rest of your life. Having been inside financial markets for nearly 4 decades, you'll find that you will make a lot of rules. You need a rules-based trading system. I'll share one of my rules with you. Make volatility your best friend. When you're looking at price going up and down, that's not a bad thing. That's how you make money. Please let me know in the comments, what are your favorite rules, your own personal favorite rules? And I suggest you always create your own rules as well. And thank you to everybody who just pinned what their favorite areas of the cheat sheet were, and also the creed. As the markets come down and go up, and there's a lot of stress inside the markets, it's really important to understand that life pullbacks give you the strength for the next life rally. Pullbacks and life is not there to harm you, it's there to make you stronger. So many people say, pesky life, I'm going through this lesson, I don't want to learn it. Life is to blame, or somebody else is to blame. We must be accountable, because if we're not accountable, we can't learn, and if we can't learn, we can't win. I would love to get your thoughts on this particular quote, I win or learn and never blame. It is so incredibly powerful for life, for trading, for everything. Please let me know in the comments. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.